अनुमान था उससे स्लाइटली मिस आप कह सकते हैं, स्लाइटली अनुमान के इर्द-गिर्द ही आते हुए दिखाई पड़े हैं, जहाँ पे कंपनी का मुनाफा 3,354 करोड़ रुपए से बढ़ के करीब 3,570 करोड़ रुपए के आसपास आया। हालाँकि जो अनुमान था वो 3,540 करोड़ रुपए के आसपास था, तो उससे थोड़ा बेटर साइड पे मुनाफे का नंबर आता हुआ दिखाई पड़ा है। आय फ्रंट पे करीब 22,319 करोड़ से बढ़कर आय 22,504 करोड़ रुपए आई है, जो कि अनुमान से थोड़ी-सी नीचे की तरफ आई है। एट्रिशन का नंबर 15.3% से घट के करीब 15% के आसपास आया। क्यू ऑन क्यू बेसिस पे ये नंबर आता हुआ दिखाई पड़ा है। बाजार का अनुमान भी 15% के आसपास ही था। इंपॉर्टेंट नंबर होता है कंपनी का डॉलर रेवेन्यू करीब 251 करोड़ डॉलर से बढ़कर 256 करोड़ डॉलर के आसपास आया है और ये म्यूटेड साइड पे आता हुआ दिखाई पड़ा है। अगर आप डॉलर रेवेन्यू के टर्म्स में बात की जाए तो
We will
मोर और
begin
लेस
the press conference for Wipro's fourth quarter earnings.
के वो
My
अनुमान के
name is
आसपास ही
Nisha
आते हुए दिखाई
Chandrasekhar.
पड़े हैं।
I'm part of the
लेकिन
external
जो स्ट्रीट
communications
एक्सपेक्ट
team,
करके चल
and I
रहा
will
था
be
कि
your
इस क्वार्टर के
moderator
अंदर
for today.
एक गाइडेंस
Joining
को
me on
लेके
stage
कुछ एक
is
कटौती
our
हो सकती
Chief
है, वही यहाँ पर आता हुआ
fuels
दिखाई पड़ा
our
है। कंपनी ने
business.
अपनी जो गाइडेंस है उसको लोअर एंड की जो गाइडेंस है उसको थोड़ा-सा रिवाइज़ किया है डाउनवर्ड साइड पर और वो शायद गोइंग फॉरवर्ड स्ट्रीट को पसंद ना आता हुआ दिखाई भी पड़े। लेकिन बाजार ये अनुमान लगाकर चल ही रहा था कि शायद नंबर्स थोड़े से वीक साइड पर आते हुए दिखाई पड़ेंगे और मोर और लेस इन लाइन या कह लीजिए इन लाइन टू वीक साइड पर ये क्वार्टर के नंबर्स जो हैं वो देखने को मिल भी रहे हैं। लेकिन अदरवाइज़ किस तरह के नंबर्स रहे, क्या कंपनी की गाइडेंस है, क्या गोइंग फॉरवर्ड कंपनी आउटलुक लेकर चल रही है और साथ-साथ किस तरह के नंबर्स ये Q1 के लिए या फुल ईयर के लिए एस्टिमेट करके चल रहे हैं, उसके लिए कंपनी की मैनेजमेंट आप यहाँ पर बातचीत भी कर रही है। आपको सीधे वहाँ लेकर चलते हैं।
Industry and cross-industry solutions. This is reflected in the strong growth in top accounts and also large deal bookings in financial year 25. We have continued to invest in our people, skilling them for the new AI wave. Our execution rigor with speed definitely has been acknowledged by our clients. And that's reflected in the clear improvement in our client satisfaction scores. And we have done all of this while strengthening our margins. It's a meaningful achievement in the context of such ongoing change. The global industry environment remained uncertain for most of the year. And of course, the recent tariff announcements have only added to that. Before coming to Bangalore, I've been speaking to clients across sectors and across markets to understand how things are playing out on the ground. I want to say this, driving consistent, profitable growth remains a clear priority for us, and we are focused on making that happen. With that, let's look at our Q4 and FY 2024-25 performance. All the growth numbers I share will be in constant currency. Our IT services revenue for Q4 was $2.6 billion, reflecting a sequential decline of 0.8% and 1.2% on a year-on-year basis. The order book for Q4 was at $4 billion, which is a growth of 13.4 sequentially and 10.5% on year-on-year basis. Our operating margins came in at 17.5%, which is flat sequentially and 110 basis point expansion on a year-on-year basis. And for the full year, IT services revenues were $10.51 billion, reflecting year-on-year degrowth of 2.3%. Our operating margin was at 17.1%, an expansion of almost 1% as compared to FY24. Now let me talk about our strategic market unit performance. Americas 1 grew 0.2% sequentially and 6% on a year-on-year basis. Americas 2 degrew 1% sequentially and 1.8% on a year-on-year basis. Europe degrew 2.5% sequentially and 6.9% on a year-on-year basis. APMEA grew 1.0% sequentially and degrew 4.9% on a year-on-year basis. Now moving on to our industry sector performance. BFSI degrew 0.5% sequentially and grew 0.8% year-on-year. Healthcare degrew 3.1% sequentially and grew 0.1% year-on-year. Consumer degrew 1.3% sequentially and was flat year-on-year. Technology and communication degrew 0.9% sequentially and 1.1% year-on-year basis. Energy, manufacturing, and resources grew 1.1% sequentially and degrew 7% year-on-year. Finally, Capco continues to perform well, growing 6.5% sequentially and 11.5% on a year-on-year basis. Let me now provide an update on our strategic priorities. As I mentioned earlier, we are continuing to see strong momentum in large deals. In Q4, we closed 17 large deals with a total value of $1.8 billion across our markets and sectors. In fact, for the full year, we closed 63 large deals for a total value of $5.4 billion, which is a year-on-year growth of 17.5%. Let me highlight two recent wins. One, a global technology leader has chosen Wipro for a major 5-year transformation program. In fact, we will deliver AI-powered end-to-end IT services, completely reshaping employee experience for almost 200,000 employees across countries. Our solution involves proactive support, intelligent self-service, and personalized digital interactions. In my second example, with our recent partnership with a leading global food distributor, we are taking over their entire IT infrastructure and corporate applications, which also includes HR, finance, and legal systems. We are leveraging AI solutions, and we will drive automation and simplify user interactions. This will result in higher efficiency, lower costs, and better user experience for our client. As we all know, AI has been part of deal conversations for a while, but this year, it has actually become central to almost every opportunity, big or small, helping drive productivity and efficiency. This reflects a broader shift we are seeing across the board. Let me now move on to large accounts. The second strategic priority. We continue to focus on our large accounts in our core markets and our priority sectors. In quarter four, our top 5 accounts and top 10 accounts grew 0.3% and 1.1% respectively on a sequential basis. I want to share an example that shows our momentum in these strategic accounts. In quarter four, a leading Indian private bank expanded strategic partnership with us as part of a business-focused digital transformation. We will provide AI-powered solutions to strengthen compliance management, addressing the critical need for regulatory compliance, while also enhancing the overall experience for this bank. This will help the bank boost operational efficiency and realize its growth ambitions across various functions. We continue to create significant impact for our clients through our consulting-led, AI-powered industry and cross-industry solutions. In this context, let me talk about a recent win in the aviation sector. In quarter four, a well-known Pacific airline chose Wipro to modernize its crew management and operation system. In fact, we were selected for our proven ability to future-proof the client's IT platform with AI. We will deploy our own TOPS platform to manage end-to-end crew operations, providing a unified, scalable solution that enhances experience and drives sustained operational efficiencies. Alongside all of this, we have put even more focus on client centricity, and it's starting to show results. Our latest third-party annual customer satisfaction survey shows clear improvement in overall satisfaction scores and also NPS. In fact, I want to thank our teams for making this possible. Thank you. You have heard of this. We have realigned our global business lines effective April 1st to meet our customer needs better. In fact, this change will help us deliver stronger business outcomes for our clients. Finally, just as important, supporting and growing our global talent has been a top priority all year. If you remember, last quarter, I spoke about our focus on leadership development and how we are building future-ready leaders through the Wipro Leadership Institute. In fact, we have moved our top performers into key client-facing roles to ensure continuity and stability. And we have launched a sponsorship program this quarter to help them succeed. Now, a note on guidance before I wrap up. Given the uncertainty in the environment, we expect our clients to take a more measured approach going forward, especially on two spend areas: large transformation programs and discretionary spend. With this in mind, and based on our current visibility, we are guiding for a sequential growth of -3.5% to -1.5% in constant currency terms. With that, let me turn it over to Aparna for a detailed overview of our financials. Aparna, over to you. Thank you.
Good evening, ladies and gentlemen. Let me share a quick update of our financial performance for the quarter ended 31st March 2025. and then we can open it up for questions. Our IT services revenues for Q4 sequentially declined by 0.8% in constant currency terms, which is within our guidance range. For FY25, our IT services revenue declined by 2.3% in constant currency terms. Our rigorous focus on execution has resulted in an operational improvement that has ensured that our margins have been steadily improving over the last 5 quarters. For Q4, our margins expanded 1.1% on a year-on-year basis. Our reported margins were 17.5%. This brings our full year operating margin expansion to 0.9% over FY24 margins. As we enter FY26, like Srini said, we are faced with headwinds on an uncertain macroeconomic environment that is putting a downward pressure on our revenues. That said, our endeavor will be to maintain the margins in the narrow band in the coming quarters. Our net income grew 6% quarter on quarter and 19% for the full year. Our EPS for the full year was rupees 12.6, which is a growth of 20% year on year. We finished the financial year with a free cash flow as a percentage of net income of 118%. That takes our gross cash to $6.4 billion. In Q4, our other income grew 45% sequentially, and our accounting yield for the average investments held in India was 7.9%. Our ETR was at 24.3% for Q4 versus 26% in the same quarter of last year. Our hedges continued to be in line with our risk management policy, and we had about $2.4 billion of forex derivative contracts at the end of Q4 25. In terms of guidance, I want to reiterate the outlook that Srini shared. We expect the revenues from IT services business to be in the range of $2.505 billion to $2.557 billion. This translates to a sequential guidance of -3.5% to -1.5% in constant currency terms. With that, over to you, Nisha.
Thank you, Aparna. We will now open the floor for your questions. For the journalists who are present in the room, please raise your hand and we'll pass the mic to you. For the journalists who have joined outside of Bangalore, who have joined on the Teams, please key in your questions and we'll try to accommodate as many as we can. To ensure that everyone has a chance, please limit your questions to 2 and do make sure that you introduce your publication before and yourself before you ask your question. Do we want to start with? I'll come to you, Ritu. Can we start with Rishabh?
Hi, everybody. Rishabh here from Money Control.
I'm sorry, I didn't get your name.
Rishabh from Money Control.
Oh, Rishabh.
Rishabh who hides.
Hi, Srini. So, the guidance that you have given, does it bake in all the uncertainties that you see as of now? And for, even the margins have gone down, irrespective of the AI-led product efficiencies that you have, baked in. So if you could throw some light on that. For Saurav, for you, you had said that you'll onboard 12,000 freshers. So is that is that plan on? Also for Srini, you said last quarter that clients are at the tail end and as well as the upper end of the clientele is reducing. So what's happening on that account? If you could throw some light on that.
So can we take the first 2 questions and then we'll come back to you once we have some time?
Sure.
So yes, Rishabh, our guidance does bake in, everything that we know as of now, like Srini shared. The macroeconomic environment is uncertain, and that is yielding into our guidance as well. It's basis the current visibility that we have. In terms of the operating margins, you noted that we've actually declined. Actually, we've improved, like I said, 1.1% year on year, even in this quarter. And for the full year, we've actually improved 0.9%. So, and even on our net income, we've grown 19% year on year. So it's been a very, very strong performance as far as margins and profits are concerned. Saurabh, you want to take the question on?
Yeah, so we ended the fiscal FY25 with approximately 10,000 freshers hired. That's what we had said. And we look to continue to see that, but we'll also keep a very close look at what's happening in the environment. We don't want a situation where we onboard people and we don't have challenges of deployment. So we'll keep a very close look, but that's the plan, that continuously keep growing and adding people.
Hi, Chandra Shrikant here from Money Control. Srini, as you said yourself, you've completed a full year as a CEO. How much of your work is done? How much is left unfinished? How would you sort of rate yourself? Secondly, this guidance, is it a result of what you're seeing in the US, the whole uncertainty? Because as you said yourself, you've won 2 mega deals in the last year, and I think Phoenix will also add to your revenue. So if you can tell us about that. Sort of employee addition, 732 for the full year. What's the forecast going to be for the coming fiscal? What role is AI playing as far as your hiring plans are concerned?
Chandra, if I could request that we come back to you, we'll go to Ritu and then we'll definitely come back to you. Yeah. Ritu from CNBC, please go ahead.
Okay, wanted to follow up on some of the things that Chandra was asking as well. On the guidance, if you could give us a bit more color, Srini, because even from TCS, we heard, some delay in decision making. Are you seeing any sort of cancellations, ramp downs? What are you hearing from clients? And is this more of a conservative estimate given the uncertain macro environment we're currently dealing with? Aparna, also on the margin front, given that you're yourself saying clients are turning more cautious with respect to various aspects, if you're expecting some sort of degrowth in the top line, how will you maintain these margins in this narrow aspirational range you have of 17.5%? What are the kind of levers you have? And overall, would you have the confidence at the start of the year to say if FY26 will be better than what we saw in FY25, which was not a great year for Wipro? Also, again, to follow up with what Chandra was asking as well, your hiring plans for this year, if you could tell us. We've seen finally a bit of a growth in the headcount in the fourth quarter.
Ritu, you asked a lot of questions, but I'll try to answer them. First and foremost, I think, how do I rate myself was the question from Chandra. But if you want me to answer that question, I can do that. But your question was more on the guidance. The guidance is baked into all the uncertainties that we see. But I think the most important thing is what's happening in the macro environment, right? Today, in addition to the geopolitics, this year, macro environment in the context of tariffs has created a lot of uncertainties to our clients. And this uncertainty varies from country to country, markets to market, sectors by sectors. So if you look at it, the big markets that we have, which is the Americas and the Europe, clearly the clients there are going through uncertainties. Some industries, especially manufacturing within that automotive and industrial, if you look at it, they are really impacted with what's going on. So first thing the clients would like to do is, how do I reduce my spend at this point in time when there is an uncertainty? In the another industry is consumer. They are getting impacted because how the inflation is going to be, how the consumer spend going to be, and so on and so forth. And I can tell you one example of a client where we've been doing a large transformation program for them. They asked us to pause. It was not a cancellation, but it was paused because they wanted a certainty of what's going to go. So I think that was one of the things that that we saw coming into Q4. Third, if you look at from a banking financial services sector, right, the discretionary spend is being debated internally for the clients. And if the tariffs and other things settle down, hopefully they will respend that, or else they'll be conservative till such time they have clarity. So the issue is more than the tariffs, uncertainties of where it is going to end that we see. And by the way, Europe is also going to be impacted because there's a huge trade balance trade happening between Europe and US, and that's going to impact them. And also what happens to the tariffs to China, that will have an impact to our European clients and to the US client. So with that in the context, we have looked at all the uncertainties that we have, looked at the clients that we have, and based on that, we are given our guidance.
No, we don't call out the specifics. I think it was more anecdotal to tell you that, there are large transformation programs that were ready in the fray that were happening, and the clients have decided to pause it, right? So it was more anecdotal. We're not sharing the specifics of the deal, Ritu. I'll take the next question that you had asked on how we are planning to maintain our margins. We've really delivered the operating margin improvement over the last 8 quarters in a very weak revenue environment. Uh, that does give us some confidence that it is possible for us to, continue to hold our margins in a narrow band. As you know, we don't guide. It is going to be, the enormity of the task is ahead of us, and we will be at it. And I think we are counting on the in-quarter execution, and we will see how we fare.
So this is Suchandra, and on the hiring piece, if you look at the full people supply chain, three aspects. One is our utilization, where we believe we have had space to improve, especially in the current environment of low growth. Second is our attrition numbers. On a quarter-on-quarter basis, we have seen that dip coming, and the environment also is there. And third, we don't guide for the full year, but what I'm seeing is that it'll be, we'll have to take it as it comes from a growth perspective, where we have geared ourselves from a plan of onboarding people, especially from the campuses on regular basis. But we are also very cognizant that we shouldn't do anything which is onboard people and not deploy them, or hire people and we can't take, which we have burnt our fingers 3 years back. So we are very, very conscious that we do the right way.
Yeah.
So that's where we are.
So Chandra, I took permission from Nisha to answer your question. So, I just want to give a little bit of a color to our performance of last 1 year. So if you look at overall as a company, we have degrown. But if I look at Americas, which contributes to 63% of our revenue, it has actually grown 1.2%. And if you look at APMEA, which has degrown, but in Q4, it has grown sequentially. I think our challenge continues to be Europe, which is where I think, you can see the degrowth that has happened. But what I can tell you is that we have a new team, and they have started the year with a large deal win, which will start, will consuming in the quarters ahead. And there's a very strong pipeline in Europe. I think, all we need to do is stay focused on those, and then, we'll get to where we want to get to in Europe. Now, I think some of the, I'll repeat some of the topics that Apan also covered. We did a very good job on margin improvements. Our large deal wins after a lot of years, 2 wins in 1 year. So that gives me a good comfort, confidence that, we have a good engine that looking at these large deal wins. And also, if you look at our overall large deal bookings, both year on year has significantly improved, not only the overall deal wins as well. So all these are the metrics or the markers, if you will, that you need to look at. So I would rate myself based on those markers, but I realized self-rating doesn't work for CEOs. Not even the CHRO, you are the one.
Veena, you'd like to go next?
Yeah. So, okay, Chandra, let me answer. I know Nisha is like, Srini, you're having a monologue right now. If I look at our pipeline across the markets, Americas and Europe, it continues to be strong. That's number one. Second, as far as we are concerned, we are focused on closing these deals so that we can get, getting into next quarter, these projects can get started. Having said that, the point that we are really watching is the discretionary spend. Hopefully, in the next couple of weeks, there is news about the settlement of the tariffs, whatever that is. that to actually would let the clients to take decisions. So I'm very cautious about telling you what's going to happen because things are changing by the week. So we will sense and respond to the situation. Our clients are doing what I would say is situational planning based upon what they're hearing. So what is very important